Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's keep up with our euro analysis. So in the last week, euro has shown very good price action. It was rather predictable, at least our setups, and 2-3 of them that we have made through the week in our weekly updates and in the daily updates and daily video has been done. So setups for retracements and downward continuations has worked properly, and market gradually is coming to the major support area that we have on the daily chart. At the same time, this action we should consider together with the rally that we saw in October. Because in October, in this forming reversal candle on the monthly chart, it was really significant shift in the fundamental background. So the Fed policy has changed, some progress appeared in the United States-China negotiations, Brexit has moved finally from the dead point, and a lot of events have happened. So statistics from the United States has become worse. So that has led the upward action on the euro currency. At the same time, this drop that we see on this week, it is mostly driven by shorter-term factors. And in fact, if we'll take a look at the news that we've got in the last week, there were not too much of them. So mostly, this is the same anticipation of the breakthrough in the negotiations between the United States and China. Bank of England statement, but it mostly has relation to performance of the cable. Christine Lagarde, first press conference in the beginning of the week. That mostly all that we have. And maybe just better than expected data in the United States. The ISM index was better, and non-farm payrolls release also was a bit slightly better than expected. So the anticipation of the signing of the agreement, that was the major driving force recently. And currently, market is coming to the first important test of its performance of these bullish ambitions. We will see what will happen, because these factors that has pushed euro higher now stands under a significant test. Whether it will be strong enough and whether the changes are really so fundamental that they could hold this possible drop, possible test of this major area, or these factors that have pushed euro higher right to the 1175 area is not strong enough. And the perspective of the agreement signing is more significant and brings more strength to the United States dollar. The cornerstone of this process that we see right now stands in a very, very tricky moment, because agreement between the United States and China will put the foundation for the easing of the tariffs on both sides, and theoretically should support the economy, as on China as United States. At the same time, you probably know that it's long discussing possible tariffs on European Union automobile producers. They just was postponed by the Donald Trump, but still stands on the table. And now Europe is a bit worried about the agreement between the United States and China and easing of the tariffs, because now the attention of the United States will turn to European Union, and these tariffs on European Union companies that were put on the back seat now will take the lead again. Will move on the first stage, and that is a so-called indirect factor that not discussing widely, but every trader keeps it in mind. Because if you will see the breakout in the negotiations between the United States and China simultaneously, I think that when the normalizing some relationship between the United States and China will follow, simultaneously United States will turn to European Union. And that's the factor that brings additional force to this collapse. So that is all about the fundamental background. From the technical point of view, guys, it's a very simple situation. We have the deep retracement right to the major support. Here we could tell just three things. First of all, if you keep shorts through the whole week, as we have discussed, think about stop managing and taking the profit when the market will hit the XOP. That's the first. Second, no shorts could be taken on a daily chart right now because market stands too close to the support, and it's not a good point for taking the position. Finally, third, that will be the point where we could try to take the long position, at least not maybe on a daily chart, but at least if you trade on intraday charts, that will be a good area because take a look, we have the 618 support, we have the XOP target agreement support, and market is accompanied with the daily oversold. We have the catalyst triple to buy pattern in place. It means that at least 30% pullback should follow based on the triple two pattern. So maybe not it will be major reversal and continuation of this rally, but at least minor bounce, technical bounce, respect of the support should follow. And that makes this trade relatively safe. That's what we will keep an eye on the euro currency in the nearest week. At the same time, we do not call and warn you to not take the long position blindly. Drop your time frame. Wait when the market will hit major support area. Wait when the market will hit the XOP. Once it will be happen, watch for bullish reversal pattern. Do not take the position just because market at the support. Watch for some patterns, for reversal patterns. Maybe it will be minor double bottom, maybe something. Butterfly maybe it will be formed on the 15-minute chart, on the 30-minute chart. But we should get something before taking the position. If we will be correct, in this case we will get the 70 plus pips of the reaction. So probably it will be somewhere to the 1070 area, 30% pullback of the whole downward action. That's the minimal target of the Gartner's triple two pattern. So that's approximately what we will keep an eye on. But in general, I would say that, especially on the weekly chart, euro currency looks really bearish. It looks negative, and I will not be surprised too much if market still will erase the October rally. So after the pullback here, after the technical response of this support area, if market will establish downward action, will erase the October rally, well, that will not be something really outstanding. So we also should keep in mind this scenario, and in the current circumstances, especially if the agreement will be signed between the United States and China, if this agreement will be better than expected, details of this agreement will be announced, that definitely will lead to the deeper downward action. So we also should be ready for that. That's why if in current situation you try to take the long position, take profit fast, do not mirror this position because technically market stands bearish, and taking any long position should be very short term. That's our view on the euro right now.